What if I told you there was a company out there in one of the fastest growing sectors in the world, and this company is said to be one of the leaders, if not the leader, in this rapidly growing sector? What if I also told you this company is operating in one of the fastest growing economies in the world, and in the last 3 years, its operating revenues are up over 3 times? Knowing this alone, would you buy this company? If the answer is no, what if I finally told you this company is currently trading at a whopping 40% discount? Would you buy it? If the answer is yes, then you need to pay real attention to this video because we have a serious problem. Now look, electrical vehicles have been all the rage over the last couple of years. Of course, the world is transforming into a more greener place. And electrical vehicles, well, they've been all the rage. Not only taking over the roads, but taking over the stock market, and it seems taking over YouTube and social media. You literally cannot turn a corner without some novice investor with a YouTube channel talking about why NIO's gonna go to the moon, or Tesla's gonna go to the moon, or Workhorse is gonna go to the moon. Rest in peace, Trevor Milton and Nikola. Now in this video, we're gonna talk about the Chinese mega EV giant that is NIO, the 9th biggest car company in the world by market cap. Dubbed the Chinese Tesla here on YouTube, is this company a buy? Because from its IPO in the end of 2018, this stock reached an all-time highs earlier this year of up over 1,000%. But from then, it's been a bit of a rough patch. The company has sort of fell by the wayside and is down 40% from its all-time highs earlier in this year. But surely with this company falling 40%, it's nothing more than a buying opportunity for this company that was dubbed the Chinese Tesla. Surely this company is going to go to the moon and we're all going to make bank. Well, if you think that's actually going to happen, I implore you to seriously watch this video before you just YOLO in with leverage into NIO, because what I'm about to tell you could hopefully change your investing career forever. Now, the biggest problem with NIO stock is not necessarily the company, it's you, the people watching this video. It's come to my attention that you have not hit that like button yet, and if you do so, you will get double life experience points for the next 30 seconds. So level up, make sure that like button is turned blue, and now we can crack on with the video. Now, NIO did recently just release its earnings for the second quarter 2021, and a lot of analysts think this is very positive, especially in terms of deliveries. Let's have a little look into it. NIO in the last quarter delivered a staggering 21,896 electrical vehicles to the market, which is a whopping 110% growth for the same time this quarter 2020, which I'm not gonna lie, it's pretty damn impressive. That's some serious growth. Taking out the whole Miley Cyrus, 110% plus is definitely nothing to be laughed at. But here is really where the issue lies, and a lot of people sort of brush this by the wayside. NIO, of course, is a big player. I mean, it's not Nikola, Trevor Milton just pushing down a cardboard truck down a hill and saying, look, this is an EV truck. NIO is a legitimate company providing legitimate cars and turning over legitimate money. I mean, it is not profitable yet, and we'll talk about that in a second. In fact, no, we're going to talk about it now. That's just it. NIO still isn't profitable, and I do think they'll be profitable very soon, maybe even this year. It's a possibility, but NIO, again, is not a profitable company. It's a company in its growth stage, which is valued as the 9th biggest car company on planet Earth, and it's never turned over a profit. Just let that sink in for a second before you start rage quitting and hitting that dislike button. Just think about it. It doesn't really sum up value. And if you're still not seeing my point, let me break it down for you. The way you measure the value of a company in wholeheartedness is by its market cap. The market cap is with the company sort of sold everything, its stocks, its assets. This is the total value of the company. But market caps are not necessarily the value of the company today, because stocks are forward-looking. You've probably heard the expression, all the market cap and stock price represents is future revenues and cash flow. This is what people see the company doing in the future, not necessarily what the company is doing today. So if NIO is valued at $63 billion US, which it is at the recording of this video, then this is what investors expect this company to be worth at some point in the future. It's not necessarily a representative of what it is today, and it's especially not in terms of revenue, because again, it's not profitable. But the idea of the stock market as a whole is you pay a premium on any investment. You buy this company at a premium in terms of profits because you're getting a slice of their future operating revenue and cash flow. That's what investing into the stock market is. You're paying a premium pretty much in every single company to get a slice of the pie. And that's why we have ratios like price to earnings ratios, price to growth ratios, and many more. And typically the price to earnings ratio, the PE ratio, or the PEG, the price to earnings growth ratio, are one of the best measurements, or the basic measurements should I say, for valuing if a company is good value, because it is so simple to use. On price to earnings, you want it as close to 1 as possible because it represents the value of the earnings to the share price. So you want it as close as 1. But you can only do this if the company is profitable. And NIO, unfortunately, it isn't. But when the PE does come out, because when they do get profitability, and again, they will get there, I'm expecting a really, really high price to earnings ratio, and I'm talking way over 100. But the big point I'm trying to make here is the market cap is $63 billion US, and it's the 9th biggest car company in the world. They sold 21,000 EVs in the last quarter, but BMW, a company that is valued less than NIO, yes, less, currently around about 85% the value of NIO in terms of market cap at $53 billion US, sold 86,000 EVs in the last quarter. 86. That's more than 4 times as many as NIO. Now I know some of these EVs are hybrids and not necessarily fully electrical, but BMW is going there, and I don't want to say BMW is a good investment because that's not the point. That's not what I'm getting at. But what I am saying is if you're super bullish on NIO, you should be crazy bullish with leverage on BMW because they're selling more cars, they're not diluting, which I'll come on to in a minute because that's definitely scary, but they are a big brand that doesn't need to raise capital and is turning over a profit. And to put a nail into the coffin that's going to come down in the arguments, NIO is a growing company and it's growing faster than BMW. It's simply not true. BMW's EV sales compared to NIO's are up like 110+%. But BMW's EV sales quarter on quarter are up 166%. So BMW is selling more EVs than NIO itself, and again, doesn't need to raise capital, and again, is profitable. So just pointing out in terms of value, if NIO is good value right now at this current price, BMW should be great value. And there's other companies like Volvo and Nissan which should be, well, I mean, they're the next Amazon. If you want to say NIO's good value, they should be the next Amazon. Now, I know this video is already going to be lighting up with dislikes and people in the comments saying NIO taxis and NIO's a tech company, but reality is NIO is not the only company in this game. I've got a BMW 5 Series, which is half electric hybrid. It's a 530e, pretty much drives itself on a motorway. You've got Google making a Google car that can self-drive. You've got Apple entering the race. And let's be clear, Tesla's winning this race anyway. There's a high probability NIO's technology is just going to be the same as everybody else's. Now, I know it's going to trigger so many people who are bullish on this company, but think about it logically. You're pulling your hand into a bag of sand, hoping to pull out a diamond. Now, there is a chance of it happening, but in reality, they're not winning the market right now because Tesla is in terms of self-driving, and the robotaxi may take off, but again, they won't be the only company there. And then if you look at what China's doing in terms of regulation, well, the robotaxi might not even take off at all. Now, can NIO run up all the way to the moon? Absolutely, of course it can. And there's a good chance it would and might, but this is not a value play. This is a hype play, a momentum play, something along them lines. It's definitely not a value play because a value play, you're buying a company that's market cap you think is undervalued. You've got to think, where do you think NIO will be in terms of value? They're not profitable. They're not outselling cars with companies that are valued way, way less than them. So how the hell can this market cap, which is forward looking, be justified? Because right now, you've got years and years and years ahead of growth priced into the market cap of this company. I mean, if you just go on the BMW example and you made it very simple in terms of one car equals $1 profit, NIO has to sell 4 times as many cars to be even close to BMW's valuation. And that's taking out BMW's existing ICE vehicles. This is just EV alone. Now, the biggest thing that I think is worrying here is the share dilution. If you don't know what share dilution is, basically it's where the company needs to raise capital to pay off debts, or in this case, build a factory and invest in their products. They need to raise capital because, again, they're not making money from cars yet. They're not profitable. So they need to raise capital. And what they do is they sell shares at the market to people like me and you. Now, this is not normally a bad thing in today's market because look at what happened with AMC. People think dilution's a good thing. Let me stress to you, it's not. Let's say you order a pizza from Domino's, and by the time it gets to your house, you've only got half a pizza. Would you be happy? No, because you paid the full price for a pizza. But what Domino's have done is realized on the journey to you, we need some more capital. So we're going to take that half a pizza and give that half to somebody else and make twice as much money for the same pizza. Very simple analogy there, and hope you get it. But that's exactly what happened with NIO. In the last few years alone, NIO's float has gone from 1 billion to 1.5 billion. Up a massive 50%. But trust me, dilution is not a good thing long term because one share is worth less value. Hopefully I'm getting that through to you. If you want a full video on dilution, I can do it. I think it would be a good subject. I just don't know how many people are interested in it, so let me know down in the comments below. But using the BMW example, how much are they diluting? Well, I'm not even gonna compare it because you should go and do this research yourself and then come back and tell me what it is. Because let me tell you, it's not 50%. Now look, I know this is not what investors in NIO want to hear, and I understand it's going to upset a lot of people because it's going against the narrative. And I don't really care about going against the narrative, getting dislikes or negative comments. I'm a big boy, I can take it. But the simple fact of the matter is, a lot of people right now have the really wrong mentality and a crazy, stupid process. And yes, a stupid process when looking at investing. I mean, you're on YouTube, you're looking for advice. And by the way, this is not financial advice, just a bloke with a beard here. But you are on YouTube nonetheless, looking to enhance your learning. You're on here looking to find out about NIO stock. Unless, of course, you're here for the pretty face, in which case. But reality is we all go on YouTube, Reddit, and social media to look for other people's opinions. But the problem is people look for the opinions first, then do the research on the company and the growth, and then maybe look for the fundamentals. And it's a completely crazy process because when we start researching a company, we want to buy the company. I mean, let's be honest, we don't want to waste our time looking at a company we don't want to buy. We're looking at every company hoping that it's a good investment. Every company, literally every company. It doesn't matter if the company sells rubber dog shit out of Hong Kong. We want to buy it if we're wasting our time looking at it. That's just the way the human mind works. But the big problem with the process people are doing now is they're looking at the news, they're getting sold the idea that NIO's going to have robo-taxis and it's going to fly cars and, I don't know, go with Jeff Bezos to the moon and stuff like that. And again, I might be massively exaggerating here, but the problem is people get sold the idea before they have the screener process of investing. The way you should do it if you want to survive long term is have a basic screener. Look for companies that are good value, have good balance sheets, and look good overall on the basic dollar level, then go and see what they're doing. And that's a good way of sort of making sure you're doing as much due diligence as you can and trading and investing like a robot. That's basically what you should be doing, not getting emotionally caught up like the people will be in the comments of this video. And speaking of strategies, if you want to see my strategy, you can sign up with eToro down on the pinned comment and you can see my portfolio live. And if you sign up via that link, deposit and make a trade, you do get lifetime access to the LWT chat room and we can both hate on NIO together. But look, my final thoughts on NIO is it will grow as a company, it will sell more cars, it will become profitable. Its battery swap technology I do prefer than the charging technology, and also its robotaxis may well take off. But the simple fact of the matter is how much of this growth is priced into the 9th biggest car company in the world that only sold 21,000 cars last quarter. Think about it. It doesn't make sense, especially in terms of value. But if you are an investor in NIO for the long term and you think this is going to go up to $1 trillion market cap, then hats off to you and I wish you the best of luck. And thanks for watching the whole video because I know a lot of people will have rage quit. But the final point I want to leave you with is I am personally happy missing these moon trains, missing these stocks that go up 2,000%, because I know you can be right, and wrong, and that wrong will wipe out absolutely everything you've ever had to invest. I've seen it happen in day trading. I've seen it happening investing on a regular basis. I've seen it on the first crypto run. I've seen it on the weed run. I also seen it on the crypto stocks run. I've seen it many a time with the stock market, and EVs I think could be the next big one to go pop, but that's a different video in itself. Just be safe and invest with wholehearted knowledge. Do your own research and do not ignore the fundamentals. Because a good example is just over a year ago, Tesla's biggest competitor at the time, apparently, Nikola, was literally pushing a truck down a hill and calling it an EV company. This stock literally went up crazy amounts and was one of the biggest car companies in the world, and they didn't even have a functioning vehicle. Now the CEO, Trevor Milton's gonna go to jail for fraud and loads of other crazy stuff. But my point here is a lot of people lost a lot of money because they seen this truck being pushed down a hill and they didn't know it was being pushed. If you'd looked at the fundamentals of this company, it was of course a pretty bad sideshow, and that's why I never invested in it. Now I know there's going to be a lot of people already who are going to be like, well, it was obvious with Nikola, it was obvious with Workhorse, it was obvious with Lordstown Motors. Well, the simple fact of the matter is, if it was obvious, please share me on Twitter at LWT Trading your short profits from shorting it. Because if it was that obvious, surely you'd obviously have shorted it. You see, it's always obvious. It was obvious that the tech bubble was going to pop. It was obvious that there was a market crash in 2008 with mortgages. It's always obvious in hindsight. But reality is, it's never really obvious in the moment. So finally, if I haven't persuaded you to get out of NIO and stop buying it with leverage, then best of luck to you. I wish you the very best. I hope someone has learned something from this. The code word for this video is Trevor Milton is going to jail. Down in the comments, tickle the like button on your way out. And if you want to learn more about stocks and see more of this guy with a beard, check out the video up there, and I'll see you in the next one. Take care. Peace.